Let us analyze our fourth transaction. Rohan opens a bank account in the name of the business and invests $1,000 of his own money into the account. We'll keep in mind that every accounting transaction follows the double entry system, where each transaction involves at least one debit and one credit entry. This system ensures that the accounting equation assets equals to liabilities plus equity remains in balance. In other words, the total debits must equal the total credits for every transaction. Since Rohan invests $1,000 in the business, assets equivalent to $1,000 will be added. At the same time, since Rohan pays it himself, the owner's equity will also go up by $1,000. And there are no liabilities created for this transaction. The lesson from this transaction is the owner's investment into the business raises its assets and owner's equity.